Hello, everybody. Welcome to XM live trading session in the beginner's room for the wave trading masterclass with me. My name is Junaid Wahid, trader analyst in Forex and Structure. Started trading back in 2011. And here we are with the wave trading. Earlier today on our morning session, I got a question about oil, what I think about oil. And I'm going to check, I'm going to share the wave analysis and the trading signals that I have and I am expecting. Purely technically, wave theory wise, we have completed this massive bull wave that we traded live here in XM Live. The crash on oil that went sub-zero, it was the craziest thing we have ever seen in the oil market, happened during COVID news, March 1st COVID news, which we got, we were here in XM Live together, we were trading when oil price was declining. Okay, here we started the XM Live project. Here we started the XM Live project in this mashed potato consolidation here on oil. Before that, I was trading this inverse head and shoulder. The best trading I had ever in my trading career before COVID was this trend to the downside. Sterling dollar, oil, euro dollar, major currency pairs, everything was declining down. Dollar was the king back then. It was really amazing trading. Then 2015 and 16, price died. I lost some money here from everything I made here. I lost a little bit here, but this bottom formation, we traded amazing bullish pin bar on the monthly. I traded them on the lower time frame. Then we got double top, second high, very strong bullish engulfing. Here I gave back quite a lot of profits also because I was trading lower time frame consolidation. It was not trending, blah, blah, blah. Then price started to slide down before COVID. You can see this is January, February, and March. On February, I was talking about potential long opportunities on oil. I very well remember, but I was fine also to sell. Why I was talking about potential long opportunities? And in the case market breaks down, I would sell because this was a bearish engulfing, great for short. That was just first target. This first target here basically was level to watch for long opportunities because it's a classic support level, even though we have head and shoulder here. In case market gives us a bullish price action, we go up 78.6 or just bounce back for technical reasons. But if market breaks down below the low, that was the zone to keep an eye for the cheapest $28. It was so nice to have that cheap price. I very well remember, but we didn't get the same cheap price here on the gas stations in my country at least. Market crashed. This is not the lowest price. This is adjusted price. It went, I think, sub-zero levels. Crashed. It was crazy time. Then here, this spike here, basically on the daily chart is double bottom. Fantastic, by the book, buy, enter. This was one of the missed setups I did miss during live sessions here on my real accounts, on my live trading education accounts. Everywhere I have missed that. Why? Because I was very skeptical, not knowing what's going on with this COVID thing. Will we ever get back to normal? If you were trading there, you very well know what I'm talking about. Anyways, the market started to grind up, easing monetary policy, and all of the measurements and everything that has been taken actually helped oil price to recover. The most difficult oil trading was here. It was the most difficult grinding up, three drives pattern, pullback, but I managed to take part of this, some part of this, but the entire rally here, luckily. So the fourth to fifth wave I managed to take, and I was doing wave analysis very clearly here, like this. And what we got here, A, B, C correction. Let me do it like this. Zooming in, this is wave A, B, this must go lower low, C. So how do I find this? Is actually, in reality, it's not ABC, but we're going to use it as ABC, as single 8-wave structure on the monthly chart. This is W, X, Y correction. Why I'm placing B here? Mostly because currently we have here wave number 1, 2, 3, 4, 5. Okay. So back then, when I saw this 5-wave structure, I'm like, this is really gonna go for a zigzag. So we're gonna get 5, any 3, 5. That was the expectations back then for zigzag after these 5 waves. But because of my fundamental view, I was thinking that this could be actually completion. I was breaking down to 3 to 3 this wave to the downside. This to be the C, and we get 1, 2, and here we shoot up for a 3, which was impossible fundamentally and price wise. Like, this must go for 300. Many people were talking about $200-300 per barrel oil back then. Technically, it was looking interesting. Fundamentally, there was potential for some drama to happen. But what happened back then is, let me write it here. This is going to be A, B, C. So we have A, B, C, D, E. Actually, C, D, E could be, this could be the B wave. And if that's true, this is going to be 1, 2, 3, 4, 5 ending diagonal, because it cannot open large to go lower low. There's no reason for that. So there is a big room down to 43 or $40 of oil per barrel oil. Technically, there is a chance this goes down there. On the other hand, we have completing there, so we can count the lower time frame waves like A, B, C, D, and E. We complete the triangle here, and then we get here 1, 2, 3, 4, and now we are getting finish 5, right? This is another way to count it. In reality, what is the most important thing is the price action and the reasoning behind at this point. So I'm buying it just because of this A, B, C getting completion price action. I cannot count this so much as one, so I can go 2 and expecting 3, 4, or maybe I have A, B, C, 1, 2, 3, 4, 5, and we stay here for a very long period of time in a massive triangle, large or flat pattern. This is most likely that's going to happen because oil is cyclical instrument. It's not trending instrument. It's not instrument that we can expect $1,000, for example. It is going to go in some range of price that we have since 2010 chart here in this core range. So I don't think this is going to move further beyond that. Like, it can go like this, it can go like this. I think this is going to be the best case on oil. If some huge drama happens, maybe surges a little bit to very expensive prices, this is going to be the box of oil in the very long term. Do we expect $300 per oil? Well, it's some crazy cataclysm. I don't know what must happen. So if this price goes there, but if this price goes there, there's really bad thing that is happening, that the price of oil is going to be the least problem that we will have. Okay. What can actually make oil price goes up? Scarcity and huge demand. Okay. Scarcity. What is scarcity? Not to not have enough oil. To oil to be scarce and nobody can find enough oil, and huge demand because of that will definitely end up by increasing the oil price, because the demand usually increases when the information about oil is that it's gonna be scarce, like there will be no oil, the supply will be down, so everybody is going and buying oil. So because of that reason, we can have strong rally. What that is in reality that we can have so the oil price goes up. Technically, wave analysis suggests that this is the zone to watch for long opportunities. Watch for price action by setup. Let's make it smaller. Okay. Watch for price action by setup here in this zone. Why I'm setting such a big box is because this is the zone wave theory wise. Like now it can be like, because we can say that it spiked down. So we probably have 1, 2, 3, 4, 5 wave completion with little spike down. It is valid setup that price can actually retrace itself up significantly to high levels. Or if it didn't, if it's gonna stretch, then this is not, there is not big room for a downside, in my opinion, technically, also fundamentally, that this can crash. This is unusual, crazy situation where the world stopped living. Like everybody was staying at home, no economy, nothing. And when you have zero demand and production cannot be stopped from today to tomorrow, it's super expensive to stop production to the oil companies. So for back then, if you remember, they were saying it's cheaper to pump oil and throw it away, give it for free, rather than stop the production. And now we don't expect something like this. If there is some new virus out of nowhere that pops up and closes again as a pandemic, then okay. But who knows that? Like, I have no information, no expectations like this. If it happens, bad luck. Okay, then the price can crash. But with the information we have right now, I don't expect price to crash in this manner. I expect price to consolidate, and then what is going to move the price up? We said higher demand than supply. So it is data that we can analyze. The expectations for the long-term demand is bullish. Long-term supply, it's slightly bullish, nothing much special. This is long term. Mid-term, expectations are that supply and demand are going to meet next year in the same zone, 2026. This here, it's bullish for oil. This here, it's bearish for oil. In the short term, what is going to be important is Venezuela, Russia, Ukraine situation, OPEC production, forecast, US Strategic Petroleum Reserve, Canadian export-import, Europe economy, and Japan's economy. Why Europe and Japan's economy are so important for the oil prices? Because they are the largest importer of oil, plus China. So the most important thing is US, Europe, China, and Japan's economies, because they are the oil importers, the large oil importers. Even though US is the largest producer of oil in the world, they are also quite large importer of oil because they need more oil. And if US economy is very good, this is supporting high demand for oil, and oil is rising up. If Europe economy is getting better, they are importing a lot of gas and oil, and the price is going up. If Japan economy is getting better, the price is going to go up. If Chinese economy is getting better, the price is going to go up. So economy of these large importers is very important. So keep an eye on the economy data for these large importers: US, Europe, Japan, China. If they are improving, or we have some monetary policy that supports future rise in the economy, US is cutting interest rates and going to start printing money. Europe is cutting interest rates and will start printing money significantly. They will need more and more oil. China is having fiscal stimulus and monetary stimulus, significant printing money, but they have a lot of other troubles. Japan is tightening right now, but we don't know. Like, Japan is really question mark here. They are doing exactly the opposite of the world. They are kind of balancing the world. So if Japan import, because of the slowdown in the economy due to higher interest rates, hits, then this is going to be the weaker part of the importers. Japan is often the largest importer. Okay, they are usually buying from Middle East, not from Russia, not from other. They are buying from Middle East, so it's very important to keep an eye on Japan. Okay, US is buying vast majority, if not more than 90%, 80, 90% of their import of oil from Canada. There is speculations and fake news that they are buying from Russia. They don't buy from Russia. If they do, it's very small amount compared to what they import from Canada.